What is up, YouTube? What is up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. And we actually have a post-trading analysis video on Monday morning because we took some trades over the weekend. So for people that were wondering, can you trade TCT models also in the weekend? Yes, you can. There are sometimes just amazing trading opportunities on Saturday and Sunday, and overall, Sunday is indeed an amazing trading day. You have to ask yourself, right? If you pay close attention to the chart, you will realize that typically around Sunday PM sessions going into Monday open, price tends to have very aggressive moves. And then you need to ask yourself, does Mr. Market Maker just go behind the chart exactly on Sunday PM and Monday morning and then press a few buttons and make price move? Or does the market maker position themselves prior to the aggressive move happening so they can benefit of that aggressive move? And obviously, the second answer is the correct answer. And typically, when you see those aggressive moves on Sunday PM, Monday open, market makers already positioned themselves prior to that move happening so they can benefit of that move. And if they enter and position themselves prior to that move happening, and that move is Sunday PM / Monday open, then on Saturday / Sunday morning, they are already manipulating the charts where we can benefit of, so we can also take those trades and hit those TPs when they hit as well on those Sunday PM and Monday open moves. I've been a very, very big promoter of trading on Sundays, or at least analyzing charts on Sundays. Saturdays tend to be less volatile, but the trade that we took, and I'm presenting to you guys right now, was actually on Saturday. So Saturday sometimes also has amazing moves. But typically Sunday is the better trading day. And sometimes you can even get a weekly pivot on Sunday, because then Monday open has an aggressive move and then you are already positioned, and then the market trend for the remaining of the week. So we're going to dive into the TA aspect behind taking this TON trade, but I can already spoil it for you guys. It's going to be the same thing we always do. High probability accumulation models, enter on the third tabs. You know the deal, okay? But we're going to dive into it because there were some extra details that you guys can learn from behind taking this trade. So building some context on the macro scale, I'm looking for a potential macro PO3 right here on TON, because we have this beautiful range that tried to accumulate but failed, while leaving this beautiful return to zone. And we didn't just fail, we pushed down very aggressively, coming into high time frame key demand. And if you've watched lecture 8 of the TCT mentorship, you will know that if you have this range and you have that beautiful return to zone and you get that pop back down coming into key demand, it is meeting all the requirements for a potential PO3. Now we just need the manipulation phase, which is this current phase, to give us some high probability proper valid entries in order for us to get a potential insane high probability swing long. That these plays could be like 1 to 100 RR setups if you get that refined entry for a 180% move up. So I'm paying close attention here. I'm watching it with the Discord community to see when we can take some live entries. So if you're curious into wanting to know when I enter certain positions, definitely check out the Discord. That's going to be the best place for you to be, to also accelerate the fastest in your trading journey. Okay, but we simply went down, bounced from high time frame key demand, pushed back up, see that V-shaped recovery. What can you expect after a V-shaped move? Some sort of range, and you can see right here, rejected off supply, got a move down. Following that structure from low to high, we have a low, high, higher low, higher high, and then we wick that low, okay, sweeping the liquidity from that low. And ever since, we went over into a range. Now, obviously, price is making higher lows and higher highs until we make that lower low, and then we pull our range from low to high, get that move back towards the equilibrium of the range. Currently not visible. I'll put it on the chart real quick right there. Get that move down to the EQ, confirming the range. But even though I've given you guys the technical parts of validating a range with getting those EQ touches, that doesn't mean that it's a high probability range. I'm not saying high probability model, I'm saying high probability range. Now, what do I mean with a high probability range? With ranges, you don't just want to look at the technical aspects, you also want to be rational. And a range is simply horizontal price action, rangy price action, sideways price action, And what you can see right here, after putting in the low and the high, coming back to that EQ, price literally does nothing but goes sideways in this blue highlighted area, right? Literally nothing happens but a move up, move down, and then just literally hovering around this equilibrium. So this is actually a very good range because you are going sideways. So always keep that in mind when pulling your ranges, okay? Yes, I've given you the validity, if that's even a word, of touching the EQ, but you just want to see sideways price action in the process as well. So we can see a range in here. There were some low time frame scalps, didn't really take them because TON is not particularly a main trading pair. But if I see sometimes an entry and the other pairs don't give better entries, then I will take TON. But we had this range. We had a deviation of the low at around the Friday PM session. And then from there, got that move back up. And as we can see right here, kind of from this high going to the range high, we can see some sort of a liquidity trail getting built up where we have this high, and that's a lower high compared to that high, and that's a lower high compared to that high, and that's a lower high compared to that high, and that's a lower high compared to that high. So you can see all these highs are stacking up to be lower highs compared to the previous one with very minimal supply in the process. You did have some supply in the upper section right here, which is extreme premium supply, meaning is the last supply remaining that's protecting price from coming towards the range high. So every time you have supply in that premium section, definitely be aware that you want to take some profits in here because I actually took my profit in there. Okay, it was very close to the initial technical target, but you know, the best liquidity curve was actually starting from here because within these points, there's no supply kind of holding price or protecting price from reaching higher until right there. So this is overall an amazing return to zone, but the true return to zone starts from this high that has just lower highs and no supply in the process. Okay, so we can see that tab 1, initial range low, initial range high, we sweep that range low, and we go up and we backtest supply right here. Now, I've explained multiple times that these retests of supply are extremely beneficial for us because that means that once price confirms the third tap right here, this supply is not there anymore for price to reject from, because once price mitigates the supply zone, it already did its work. So it's not valid to use anymore. I'm not using a ran through supply zone right there. No, you mitigate it and then it's done. Now, for us, it's obviously super nice because if we can get that entry confirmation in here, that means there's no resistance that's going to hold price down and you can just simply move up higher. But the actual technical aspect behind this from a Wyckoff standpoint, because we're trading a Wyckoff accumulation using our set of rules, and therefore I've reframed it to TCT accumulations, we love this supply, right? Because the supply is then not there anymore to hold price down after confirming our entry. But from a Wyckoff standpoint, what they're simply doing is they are testing how strong this supply is, okay? And then if they get the confirmation that the supply is weak, they know they can flip price and push it higher because buyers can then be in control. So they're simply testing the supply to see how strong it is, and then they're pulling price back to position themselves to push price higher because they know that they are ready to reverse price back up because the buy-sell ratio is right for more upside. Okay, so that's kind of what they do from a true Wyckoff standpoint. Now, obviously, right here we can see, which is very important, that after that retracement back up, mitigating supply, price pulls back into your extreme demand. So if you want to validate, obviously, a TCT Model 2 accumulation, you want to have price pulling back into extreme demand and or sweep extreme liquidity. And there wasn't really obvious extreme liquidity right here because it was just one move up. But we did have obvious extreme demand, which was this 30-minute order block. So if your extreme liquidity is not clear, but your extreme demand is, obviously just focus on the extreme demand aspect. What's very important in here is that after price rejects from that supply, it pulls back slowly into your third tap POI. Because when price pulls back slowly, it gives you the confirmation that this is not just a, fake move up to mitigate supply to go lower. No, it's a move up to actually test the supply. And then once it slowly pulls back, it gives you that confirmation that it's just pulling back to mitigate more to then squeeze back up again, because price loves to go where liquidity is located. So if you create liquidity above while coming down, it gives price all the reasons to come back up again. So you're very confident in a higher low for a higher high there. You're still going to wait for market structure, but even if you get that low time frame break and you have that liquidity above, it gives you way more confidence for actually higher prices and to also trade that low time frame break because you're not expecting a fake break because it actually has reasons to go higher to grab that liquidity. Okay. Now, right here, if we follow that structure between our second tab high or the high between our second and third tab, so we have our tab 1, we have our tab 2, we have our tab 3. To confirm that entry, we want to break structure back to bullish from the highest point between tab 2 and tab 3 down towards that third tab low. So if we draw a structure following the 6 candle rule, which is all explained in the mentorship, guys, you can find it on this YouTube channel. You're making lower highs and lower lows underneath the playlist section, by the way. Lower highs and lower lows, and from here, you actually SFP that high. And this is kind of where the tricky part comes in. And it's not really tricky, but I noticed that some members actually struggle with finding an entry on here. On this specific time frame, on the move that you're watching, this is that main market structure pool. Okay, you can consider this your level 1. Now, in lecture 1 of the TCT mentorship, I talk about different levels of structure, level 1, 2, and 3. Okay, structure from the top down right here is going lower and it's wicking the high. So even though you made a higher high, it's not a you're not convinced that you're going to put in a higher low because it's a wick. It's not a break of structure. However, I have told you guys the different scenarios after putting in a wick. If you wick the high right here, but when you pull back from that wick and you break your structure from top to bottom back to bullish, and I'm going to highlight that red, in other words, you pull that level 2 market structure back to bullish, you can still confirm your higher low for the higher high because this break of structure of your red market structure will still confirm a rotation back up to that high. And then from there, you can actually break it. Okay. But you can literally enter on the reconfirmation of this red market structure drawing and still trade the Model 2 accumulation the same way, even though your black market structure drawing SFP that high. Okay. Now, zooming in as to what happened after price wicked that high on a lower time frame, we can see right here that price wicked that high, and then look at what happened. Following our structure, low. You can have some low time frame lower highs. I'm going to skip over them because they're not relevant anymore. Boom, 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 boom. So this is that downward spool. Right here is that market structure high. And right there you have that break of structure. Okay. Now, this break of structure confirms that this is going to be the higher low for a new higher high right here. And then from there, you can break that and then continue your way up, completing the Model 2 accumulation. But if you pay close attention, something even more significant happened in here, allowing you to be even more bullish. Because if there is some sort of extreme demand right here, that is this last pullback right here. Okay. Now, did you actually go a bit lower? No. So there isn't valid structure demand to look at. Okay. But if there's some sort of structure demand, you will see that this is a tiny push up before a push down, mitigating the extreme demand of this move up we were initially talking about, and then pushing price higher. Now, you don't have the inefficiency like you want to have to confirm a proper extreme demand POI, but this is literally the last sell to buy there is, so we can just use it because there's nothing else to use. And you can see price comes back to that. So there was actually also a reason to pull back all the way here to mitigate more demand. But then, while looking back, if there was a reason to pull back, you also want to look at the pullback itself. And you can see right here that while pulling back, price is literally creating a return to zone on the local pullback. And these are always the best, okay? You can see right here, this high is a lower high compared to those highs and those highs and those highs. And even here locally right there, these highs, referring to these ones. So price is creating a liquidity trail on the pullback. So again, if you enter on this low time frame break, you're not scared of it being a fake break to go lower because it has all the reasons to come back up because there's also liquidity higher. And what's even crazier about this setup is that You can therefore enter right there on that breaker structure, even though this is not your initial break. That's an SFB. You can still enter right there. And because you came back for extreme demand, you can put your stop loss below this low, and you don't have to put it below that low. Why? Well, there's no reasons to go lower here because there's no demand that's going to hold price up. So price doesn't have to go lower to mitigate more demand to go higher. There's nothing. So if price takes this low and closes below this low, you're going to get a rotation to that low. So if taking this low means a rotation to that low, obviously your invalidation is not going to be here, but it's going to be there. So that allows you, because you pull back into that extreme demand, to have a more refined stop loss and therefore also a more refined entry. And you can take it towards that liquidity target we were talking about, and you have a 1-to-9 risk to reward. Okay. But what's even crazier is that I always talk about 3 levels of structure. Okay. You can have 3 levels. You can have 100 levels if you want to, but I'm simplifying it to make it extra tradable for all of you. Okay. So right here, this is your black market structure. Let me make that black as well. Your red market structure was the structure from top to bottom. Okay, that was making lower highs and lower lows. That broke structure back to bullish right here, confirming that this is going to be a higher low for a higher high. So this break of structure confirms the higher low for the higher high. That's why, technically speaking, you don't need to have a break of structure in this area to confirm the higher low for the higher high. If you have it, that's great, but you are already expecting a higher low because you actually broke structure. Whereas right here on this pullback, you're not expecting higher low because you never broke structure right there. That's the difference, okay? But if you want to confirm a higher low for the higher high, like the exact pivot point, then you're going to watch for structure again. And look at this. On the 1 minute, following the 6 candle rule, you have structure going down right here. Lower highs and lower lows. So let me go on the blue time frame. Boom. So you can see that on the pullback of the red higher low for the potential higher high, you have even more refined structure. Your level 3 market structure presented to you in blue. And right here, you break that structure back to bullish. So the moment you break blue back to bullish, that confirms the higher low for the higher high on the black. And then you break that and you get that rotation back, or on the red. So breaking blue confirms the rotation to the red high. Break the red confirms the rotation to the black high. This is the domino effect, all explained in lecture 1 of the TCT mentorship, but now explained in an environment where we are trading accumulation models. Okay, so you can use those different levels of structure for just like your investing, your high time frame pivot points, this and that, but also when getting the most refined entry possible in a valid way using TCT models. And what happens is that now your entry is right here. Now, mind you, I did not personally do this because I wasn't aware of this price action live, because I entered there and then kind of walked away. But what you could have done is the moment your price pulls back, we're going to look at the same 2 things. How did price pull back and where did price pull back into? And these are 2 questions you always need to ask yourself when you're looking at an entry on a pullback, okay? Where did price pull back into and how did it pull back? So looking at the pullback itself, if there is some sort of structure demand, it's going to be this structure. That's the only structure created on the move up. Now, it isn't valid structure because you don't have the inefficiency, but you can even see here, when it's the only demand there is, right? When it's the only demand there is and that you doesn't have the valid inefficiency, but you have that mitigation there, you can pull that demand below that mitigation candle to get the unmitigated part of the structure demand. And you can see that's where you got the exact bounce, okay? From here, you broke that structure back to bullish. So price actually had a reason to come back down, okay? It's not a strong reason, but, we're talking in hindsight. You also don't have to make this conclusion in a live trading environment. But once you see price pulling down and you see it breaking structure, you can say like, okay, it actually came back for that last piece of unmitigated demand, which is nice to add, to be sure that you're not going to go lower than that exact low, because we're talking about this exact low. Because then if we can't, and if we confirm that price shouldn't go below that exact low, that becomes your new invalidation. But then, just like this red marker structure drawing was pulling back, leaving a liquidity trail, look at this. Look at all these highs. 1 high, 2 high, 3 high, 4 high, 5 high, 6 high is leaving a liquidity trail locally. So even though you're trading a 1-minute breakup structure, you are not scared it's going to be a fake break for lower because it has all the reasons to come up to here. And when it comes up to there, you're continuing that red market structure already, right? So again, just like the red pullback, this local pullback also leaves liquidity above and comes for extreme demand. So the moment you break this structure back to bullish, your initial entry is right here, right? That's your initial entry. Stop can go below the low. Right here, stop can go below the low. And that's your initial entry, and you target up higher. Okay. But the moment you break that structure right there, your new invalidation becomes this low. So you can trill your stop loss, which goes from 0.6-ish in percentage, 0.6-ish, down to 0.35%. So if you're risking $100, now you're risking around $60, right? So you can add that $40 risk that got diminished by trailing the stop. You can add that back on this breakup structure and open a $40 risk position here, and then price will combine that entry, and now you have an even more refined entry where the entry will probably be in between these 2 points or somewhere in here as an average entry. Stop loss goes there now, where you're now again still risking that same $100, and now you have an even more refined entry, and you can trade the same setup, but now from a 1 to 9 all the way to a 1 to 19, right? Which is absolutely insane. And the beauty about getting those refined entries is that if price pulls back into the demand created on those entries, it has no reason to go lower than those mitigations, because if it goes lower than the mitigations, you're going to take out all these lows right here, so you can put your stop loss to entry. So not only can you have a very refined entry, you can also put your stop loss to entry very quickly. So you can have a very high RR and you can be de-risked quickly. So yeah, it's just absolutely beautiful. I didn't add that last step to increase the RR from from 8-9 to around 19, because I wasn't watching it live because it was Saturday morning, and I was like, I wasn't initially planning on entering the trade because it was Saturday morning, and typically Saturday is my off day just to, re-energize, give my eyes some rest. But I saw this and I just couldn't deny it. And it's just like, the market makers giving this entry is just on purpose because they know that 90% of the people are just lacking on a Saturday morning. So then they bless the warriors with valid accumulation model entries that could have netted you double your or triple your weekly profit goal. It could have literally made you your monthly profit goal in a single trade just by managing it properly. But also pay attention. You can have some distribution models in the process of your higher time frame accumulation completing, because typically you'll just take the low and just go higher, right? And you can see it right here. Don't be scared of these distribution models when you're in an accumulation, because sometimes it just mitigates extreme demand and just blast up higher, which you also had here. Now, I had a full TP right there because that was where the true return to zone started, like we were talking about earlier. And you had some supply up here. And yeah, you can see price got that massive push up at around 4. Around 4 p.m. So yeah, TP got hit, and then from there we got a fast move down. Typically, when you have these aggressive one candle pushes up, then be aware for some sort of a reversal, and that's exactly what happened. And then price, either way, if I took an 80% TP, it would have stopped us out right there at entry to then move higher, because you can see our stop loss. Our stop loss is simply liquidity. We just have better stop loss placement than the typical trader, but once our move gets completed, our stop loss is liquidity, and price just searches for those liquidity points, right? So it's amazing to see. But yeah, it's very important to understand those different levels of structure to also confirm an entry, not just to build context, also to confirm an entry. So you can see right here, you have the black, the red, and the blue locally as well. That's now off the chart. But definitely study the overall sideways price action in the range, the return to zone, the supply mitigation, the pullback into extreme demand, and then especially study the refined entry process, because if you keep on waiting for that black market structure only, like, man, you're gonna have to enter. You couldn't enter right there because that wasn't a convincing breaker structure. You had to enter right here, and then you're entering all the way up there for the same target, only having a 1 to 2. And not just is your RR diminished, you can also not de-risk this position. Like, when can you put your stop to entry? You simply can't. You simply can't, because your entry's in the middle of nowhere. Okay, so yeah, I also took, this was around an 8 RR gain. I also took an XRP scalp on Saturday night in like literally at 12 p.m. or 1 a.m. But if you want to have, I actually recorded that live. Okay, so if you want to see me take that trade live, just go to my X and check this post right here, and you can see the recording when I was taking it live. There's no audio, but I was typing in the chart what I was doing. It was absolutely beautiful. 10-minute trade, realized 2%. Like, I'm telling you guys, the sky is the limit when you can trade effectively. There's no peak. Okay, you can just keep on climbing as a trader when you start to understand the game more and more. Now, overall, guys, before I want to wrap it up, if you like my style of trading, if you like my style of teaching, definitely I advise you to join the TCT trading community. Okay, I trade there live every single day. If you go to tcttrading.com, you can click on join the VIP Discord or the free community, whatever you want, whatever suits you best. I trade live there every single day, 2 to 3 live streams a day, post my setups in advance, no hindsight bullshit. There's extra private educational content. There's a backtesting area for you to practice, VIP questions, live streams, bro. It's all in there. It's an amazing community. Everybody is in there, grinding, working hard, wanting to become a profitable trader, and they're absolutely smashing it. We're smashing it. We're taking over. The community is growing extremely fast. We almost have 2K in the entire server, 2,000 people, which is absolutely insane. So definitely, if you want to invest in yourself, take that next step, join the VIP Discord, and I will see you all in the next video. Ciao, ciao.